20% of my cash flow day one. So from the get-go, and every deal is different. So some of them is 60-40, some of it's 80-20, honestly. So anywhere between 60% of the cash flow to 80% of the cash flow, I pay my investors. And those payments every quarter are just kind of interest-only payments. They're dividends kind of paid out to the investors. You're a limited partner, so you're K1 on all that stuff. And once I perform and get a value add property, stabilize it, cash out refi, and give you all your money back, instead of you being out of the deal, you stay in my deal in perpetuity. You'll get paid as long as I own the deal, you're going to own it. So what we do is, so say let's a 70-30 split, my investors get 70%, I get 30%. When I give them all their money back, it flips. So I get 70%, they get 30% for as long as I own the property. We thought that was good, but we also thought at that point that we needed to kind of, we didn't know what we were doing. So we needed to bring these investors on, quicker. So we needed to bring a value add to them above that. And the value add that we brought to that is when we sell, they also get the 30% of the profits equitably split between them. So you're going to get your money's paid, then all of your money back. Then you're going to get money paid on all of your money that's already back to you. You're going to continue to get paid on that. Whether I own it for 3 years or I own it for 20 years, you get paid on it. And then when I sell, you're going to get a check for the profits and your portion of the profits. Then at that point, what was that?
I have a question.
Yeah.
Okay, so because I've been involved with syndication before. So usually there's a time in there where there's rehab, right? And there's costs involved with that part of it. So how does that fit into your equation?
I raise all that money up front.
Okay.
So that goes right into the initial assessment. So what I'll do is I'll raise my acquisition fee, cash reserves, any repairs needed outside of cap expenditures, and then the equity piece.
Perfect. Okay.
I raise all that stuff. So my investors come to the table with usually 30% equity, whatever those repairs are, whatever that cash reserves are that we decide to put, which is usually about a year and a half of mortgage payments, right, we'll set aside to protect the asset and our investors, right? And then my acquisition fee. So I get paid on every deal we buy. So I get a check up front for all that. Cool. And then, in the back end, we sell the property, again, for easy numbers, if you own 30%, the investors of the profits on the back end, and we make $1 million, I'm going to get a $700,000 check. You're going to get a $300,000 check split between each one of you based on how much you put in the deal. Mm-hmm. And then at that point, then we're like the other syndicators where we hope that we made you enough money, made you happy, and you can roll right back into another deal. However, we hope that we can do that when we refi you out of that deal. So you're kind of getting two big paychecks. You're getting your money back. You're getting all your interest until then. Then you're going to get money on top of that on the backside, and then you're going to get another paycheck. Right. Again, my attorney thinks I'm crazy, but we've had zero trouble raising money. It takes a little bit. Sometimes, I can think of 2 investors right now that I've spent probably close to 10 hours on the phone with. And I genuinely mean this. I love it because it means that they want to know that they're trying to learn. They want to learn. They want to get into this, and they feel confident enough investing in me at that point. Like, again, I don't take that lightly. So I need to make sure all the questions are answered, all the T's are crossed, all the I's are dotted, and make sure that they're happy at the end of the day, so that when they throw their investment money in, when they get their first quarterly check and it looks great, hopefully they go and tell their friends, they go tell their family, and I can continue to build a bigger network of investors. So awesome. It's been a really wild year. It's been a really fun year, kind of a scary year, but what we backed everything on was, if you, the investor, don't fit our core values as a company, we don't take your money. And I feel like that has to be the way how it gets done. There's no exceptions to that. And I had a gentleman call me, wanted to give me some money. I'll backtrack real quick. I was about 10 days away on my very first deal, that 48 unit deal, 10 days away from my finance contingency ending. So I had to have a clear close and get ready to close, right? And I was $400,000 short. So I called up and I said, listen, I believe in this deal. I know I can raise the money. I'll give you $50,000 to give me a month. And it's all yours. If I don't perform, you walk away with my $100,000, and that's just what it's going to be, because I don't get any of that reimbursed until we close on the deal. So if we close on the deal, when we close on the deal, there we go. Good Lord. When we close on the deal, I get reimbursed my due diligence costs.
Yeah. So TJ, did you already have 50,000 as a like down payment then, and then you put an extra 50 on the line to get an extra month?
On top of the appraisal, on top of the inspection, on top of the attorney costs. Yeah. So my first deal, the attorney costs just to drop the paperwork and close the deal was about $40,000. So it's about 40 grand plus my 50,000 earnest money, plus about another 10,000 in due diligence costs, plus the other 50,000 to get the extension. And
okay, now are your attorney's fees always 40K, or are they cheaper now that you have the paperwork done?
Much cheaper. Yeah. They're about normal closing, less than 10 grand a deal. It's not bad. The first time it was because all the SEC docs that you have to sign, right? You have to make sure that everything is, I joke, I think I told you this on the phone, right? I've got a really good team. My attorney, whose one job is to keep me out of prison. My CPA, who his one job is to make sure at the end of the year I have the most money I possibly can have. I have a broker who's going to build a network to help me buy and sell properties. And then I have you, the investors, that are going to continue to help me buy the properties. But I don't care what my attorney does, as long as he keeps me out of jail. That's the end goal. I joke about it because I'm serious.
Right.
I told him, I said, listen, like, I wouldn't do well in prison. So you need to make sure, damn sure, that I am not going to prison. And so after all the paperwork was done, and it's extensive. I mean, Wendy, you've seen it. I mean, you read through it. It's 120 pages. You want to be an investor in a deal, there's 120 pages you have to read through. And I'll answer any question. I'll go over page for page with everybody. It's actually one of my favorite parts of the job, because if they're at that point where they've read that, I'm 100% sure they're going to invest in the deal. And so that's the next step is they read that, they sign it, they're an investor. So
how many people sign it without reading it, do you think?
No one. I won't actually. I had somebody that just said, a repeat investor actually say, well, just here's my money. And I said, no, I actually legally cannot take your money without you looking at that paperwork. I don't care if you say you don't need to, like you need to. And
that is your private placement memorandum, right?
Yes, ma'am. So that is the document that differentiates a private money loan, which is, secured mortgage, insured, promissory note, all the things that a private money lender would have that would be considered sort of a protection, right? That PPM is that document that kind of differentiates a private money lender to an investor in a deal. That's not to say that there's not protection. It's just not as structured with regards to lien position and named insured on the property and a deed and all of that stuff. So there isn't some inherent risk going from a private money lender to an investor. And so more or less, I mean, the way you look at it, or should in my eyes look at it, is, you need to believe in the deal. Like, you have to look at the deal, and the deal has to make sense numbers wise for you, but you're really truly just investing into the manager, the asset manager, because if they don't perform on what they provide to you, you don't make money. And there's, in theory, no real control you have over that. As a limited partner, you're sitting back hoping that somebody, a fiduciary like myself, is performing for you. And so that's why these documents are very extensive. They're very detailed with regards to what can and can't happen. The number one question I got when I first started was, what stops you from just taking the money and running? It's like, well, it literally states that in there. Like, I have to buy the asset. I have to put it in money in reserves. I have to do X, Y, Z. And if I don't, I'm in big trouble. So there are protections for the investors, but they're not like a private money lender.
So just piggybacking off of that, the attorney, so now you've done several deals that you told us about. They're all in different states, right?
Correct.
Are you using the same attorney for the paperwork for all of your deals?
Yep.
Okay.
Yep. So some states will have attorney laws that require the attorney to be in the state, right? And that's the transactional side of it. So that's the side of it when they actually close. The attorney has to be from Arizona or from California or from Ohio, whatever. So what happens in that sense is my attorney will actually just hire an attorney from that state that is in his network to do the closing part of it, the transactional side. The actual paperwork side all still comes from my one attorney. So I don't have to reinvent the wheel. He still has pretty much the control over it, but that attorney in that state gets to sort of enforce state law and be the representative on behalf of myself in that new state. So if you have most attorneys that you're going to be working with that are securities knowledgeable, have a network to do something like that. They're either in a big firm that is national, or they're in a small firm that is part of a network that allows them to be national without having branches all throughout the country. So that's one thing that as you get going, you should look into, and you should know that your attorney has the availability to do multiple states or have a way to figure out how to do multiple states.
Yeah, how did you find your attorney? Was that connections through Fortune Builders or?
No, my attorney, he was my first client at Fidelity National Title. So I started in April of 2015, 2014. Started in April 2014, April 14th, the day before tax day. I started in 2014. 2 weeks later, I got told I'm representing them in Vegas, which I loved. Went to Vegas. I got introduced to my attorney, David Silver, and he took one look and he said, any chance you can pound this shot of Jameson with me? I said, yeah. And he said, good, you got my next deal. And I'm like, good, all right. So he got back, sent me a deal, and his sons have become good friends of mine. He's become family to us. My oldest, my 4-year-old, he calls him Uncle David, just loves him. So he's become family to us. He would in a heartbeat work with any one of you guys if I made a referral over, and it wouldn't cost you 40 grand your first deal, because we've kind of created the structure and the template now that he can kind of plug and play names, asset, all that whole thing. So again, what I do with all the investors is make that available. So Wendy comes to me and says, listen, I want to do this. We found this deal. Any chance you can help me? My first thing would be like, do you need an attorney? If so, here's David's number. Let's get on a call and make that all happen. Where if they weren't an investor, like I would make the introduction, but it wouldn't be as, warm as I would with one of my investors. Right. And I feel kind of bad saying that. And the other sense I don't, because I have investors that have given me money that, again, they've worked their butts off for, that trust me, and I will do whatever I can for them, and make sure that they're all set and protected. So.
Yeah, no, and I appreciate that, because that's, one of the things I think I asked you right before we got off the phone was, okay, if I'm just starting out, where do I need to start? What's step 1, step 2, step 3? And I'm pretty sure you were like, step 1, get an attorney.
Yeah. No, it's super important. I mean, I talk to him every day. If it's because things are changing, right? I mean, you could do funds that only allow accredited investors. So you're in a whole new ballgame of private money guys. The amount of accredited investors that are out there are few and far between to the ones that are not, right?
Yeah. So the deals that you're doing are not requiring accredited investors?
Not true. The deals that I'm doing are required accredited investors, but they are allowing up to 35 non-accredited investors if certain criteria is met. Those criteria are, we have to have a prior relationship. There's a lot to it all, but One of the main things that goes into that side of things is the relationship with them. I can't solicit anybody on the street right now to go and get their money. I can't tell them I've got this deal, any chance you want to invest money. If I'm introduced to them, if they reach out to me, if they show interest in real estate, if they've invested in real estate before, there's a lot that goes to it. So that's why I said, like, my attorney, your job is only, David, to keep me out of prison and tell me if I'm doing something wrong. And I joke, but like, I can't solicit my deals because they're not accredited. So there's different funds. I can either solicit deals and market to accredited investors to get funding, or not, and have a network that can fund it without having to solicit and market.
Yeah.
Much more difficult to do this, but it opens up, you know, a litany of other options if you have a network that's strong enough to help you fund the deal. So we kind of felt like our network was strong enough to raise it without having to do the purely accredited.
Right.
And ultimately, we hope that our investors, we make them enough money to one day have them be accredited and not have an issue, right? So that is, you know, there's a lot of in between with all of that, but that is where the attorney comes into play, and I am not of legal counsel. So
yeah. So just kind of continuing on that notion of, you know, what are the steps if somebody wants to go out and start figuring out multifamily. So one you said was the attorney, and then number two was a broker, right? A commercial broker that knows their stuff.
Yeah, and the thing,
national company.
Yep, you're gonna want to. Yeah, so for us, when we first started, it was a national company that had national presence in the asset class we're looking for. So, I mean, I'm in multifamily. I love multifamily. I love that play. I joke, I say, every one of the world's problems can come down to one thing. There's too many damn people in the world. And you can't make real estate happen. You can't build horizontal. You can't just continue to, like, there's not enough land at some point. So you can always go up. So multifamily to me is a solid, safer play than office, industrial. Not to say that they're not safe, but those I love multifamily. So those brokers have to have a play in the markets you're looking at. They also have to be aware of your game plan and your exit strategy. And I think it's important to have that sort of laid out prior to reaching out to them, because they're going to send you deals. And if you don't know where you're headed with those deals, you could buy and make a terrible mistake. What I mean by that is, you might not know that market is, you should be in and out quick, flip it and go from there. So you might run your numbers and go, oh, well, this works in a 5-year plan or a 3-year plan. But in reality, you need to be in and out in 18 months and get it refied into something different, something better. Or the market's super hot, right? And you're going to be buying at the peak, and it doesn't coincide with what you would think the economy is looking at. So just because the economy is booming doesn't mean each market is booming. The multifamily market is its own beast, its own little issue within real estate. You could have a market here in Chicago is terrible for full multifamily. It's absolutely miserable. But you could go to Cleveland or Cincinnati, not desirable, but it's great for multifamily. You might like the Akron, Ohio's of the world, the Memphis, Tennessee, Nashville. Those are great. Austin, Texas, Florida is becoming really great. Atlanta. There's a lot of really
Well, I
great.
guess just to be clear, you're not necessarily looking for a broker in each one of these cities either, right?
No, you need a broker that's local to you, that has the network to go to those cities, right? So like the CBREs of the world, the JLs of the world, the Marcus and Millichaps, the guys of the world that do this on a highly professional level, that when you say I'm looking for a value add multifamily market under $2 million, 12 units and above, in a cash flowing market, not worried about appreciation. I'll get my hands dirty and be able to turn the units, flip them. I'll do the work, not worried about that. they can instantly put that into their database and shoot it out to all of their network and say, if anybody has this, I have an investor that's looking today. You're going to get a lot of crap. You're going to get a lot of ugly deals. But they're there. Those deals that those guys have also aren't on LoopNet. I think there's important differentiator between what the brokers send you and what's on LoopNet, because the majority of the time as a seller, you're telling your broker, go and find someone in your network to buy my property so I don't have to publicly market this. If it's on LoopNet, a lot of what's on LoopNet is one of two things: not a serious buyer looking to build a buyer's list. And so the guy put it on the market, and guy or girl put it on the market and said, hey, I know it's not going to sell at a 7 or 6 cap. Put it on as a 7 or 6 cap. If it takes, I make a ton of money. If it doesn't, I'm fine with that. Not worried about it. Or they get a listing and it's just not a good deal, and they require you to, in order to get your offering memorandum, to put all your information in, so they build up a buyer's list. That is what I see a lot in LoopNet. Not to discredit LoopNet, it's great for analyzing deals. I think anyone that's getting into it should use LoopNet every day to analyze deals, but use the brokers to actually get the deals.
Yeah, no, that's good advice. And I just wanted to jump in because I saw Brooke chatted a question in the box, which is, what's the minimum amount to invest with TJ? So do you have a minimum amount that you look for in your investors for your deals?
Yeah, it's going to be completely different. So each deal is, well, I like to be at 50. I like to have $50,000. The way we look at it is whatever we need to raise divided by 35, which is how many non-accredited investors we can have, right? So if we only have non-accredited investors and we have to use 35 of them, that our minimum is that number. And we cover what we need to raise. In all actuality, we'll take 25 if it makes sense, if it's the right partner, if it's the right long-term play for them and for us. We look for 50, but we'll, like I said, we'll take 25. So, and it's each deal is going to be different too, right? I mean, because you might look at the deal and say, not worth it at this. I want a bigger piece for 25,000. And you could get that if we're doing a smaller deal, right? So there's different plays with all of that as well. So, and each deal we do is completely independent from the next. So.
Okay, so going back to my list, you said the third most important thing after finding a good broker and a good attorney was a good CPA. So yeah. Does a good bookkeeper cut it, or does it have to be a CPA?
I would highly recommend a CPA. Mine, I talk to him every other week. So at least twice a month, we're talking about month-end numbers and about plans for the next month as to what it looks like. And he at September,
but that CPA is doing all your bookkeeping then in-house too, right? It's all included. Yeah.
Oh yeah. Yep. He's doing everything. Yeah. And he does, because here's the other thing too, is because of all the K1s that get involved, if I had a good bookkeeper, I'm still going to have a ton of K1s that I have to deal with now. And it just makes sense to have it all in house, and he handles it all. He does everything. He does a great job with it. I think your CPA needs to be, in my opinion, real estate knowledgeable, right? Not just a CPA that's a CPA, someone that knows real estate, knows the ins and outs, knows what you can and can't depreciate, how to depreciate. Because if you don't, it's kind of a waste. You get into real estate for multiple different reasons. One of the reasons is the advantages, tax benefits that you have in real estate long term, and you're wasting money by not having someone that's going to protect you and take care of you, big picture. So
yeah. So, and I realize you've gotten into this now just within like the last year or so, but have you thought about what your long-term goals are? Are you looking to 1031? And if you do 1031, are you looking to bring those investors then with you on the next deal? Because technically you said your investors would still have probably a 30 or 20% ownership when you go to sell. So what are you thinking about long-term? Because this is still kind of new.
Yeah. So no, that's, we've thought about all that. My game plan is to 1031. I make my money, my cash flow like my investors do. I take my acquisition fee. So I'm I'm taken care of in the deal. My investors are taken care of in the deal, and the check on the back end is going to be great. And I'm not going to turn it away, but it doesn't make sense for me to take it when I can just roll it right into another investment that is going to mitigate my tax burden long term. So I mean, if I can do a deal and cover the full equity piece, I'm my own LP and GP in a deal, right? If I need $1 million, I make $1 million on a deal, I can pay cash for it, and 1031 into another deal. It would be hard. It would not be impossible, but it would be hard to bring my investors into a 1031 deal also, because if I don't execute my game plan, I wouldn't want the responsibility of like them having the tax burden on that money when they thought that they weren't. So I would hope that my investors would have some sort of game plan afterwards if they want to try to roll into a deal and know that, you know, I might not find the deal or target a deal and get that deal closed. You know, there's tax burdens and timelines for 1031 exchanges. So we hope that we could do that and move into that. I think we will have good luck with doing that. But that is the game plan, is to take our back end profits to roll into a bigger and better one. Yep.
Yeah. And so I guess just with the way the PPM is written and, you know, who's the general partner as opposed to limited partner or whatever, at that point, do the investors have a say in whether or not you can 1031 exchange it, or because you're making all the decision making at that point? So
yeah, and I feel kind of weird saying this, but no, they don't. We take their counsel for sure, right? Because I want to make them happy. I want to make sure that they're set and good to go. But at the end of the day, like if I don't think it's right to sell or refi at that time or whatever it happens to be, then no, they don't. And that applies to the 1031 as well. Like that's my money at that point. That's where I could decide to put it. So if I decide to put it in 1031, great. If they decide to put it in 1031, great. And if they want to roll that into something I'm doing again, happily. But I can't control them with regards to where they put it, and they can't control me. Two separate, wildly separate entities. And that's for their protection and mine. So the way that it's drawn out.
Oh, that's good. Okay, so then I think number 4, you said was your network of investors. So what's your strategies right now? How are you continuing to network? Obviously, it was a lot easier when we were all at Ignite 2019, but that was a long time ago.
Right.
So yeah, just any tips and tricks or what are you doing right now to continue expanding your network?
What I'm doing is there's no time better than quarterly pay time for my investors when they're getting their nice checks to ask them if they know anyone else that wants to get a nice check. I'm not pushy with it. I think it's, I mean, I've come from the sales side. I get why people are pushy on the sales side. It makes sense. It's the name of the game, but I've built what I have by just making friends and turning them into family. It sounds corny, but I genuinely mean it. I would much rather, I'll follow up, you know, if I haven't heard from them, I'll follow up to try to do that. But we've got about 64 investors. I don't know if I'm going to backtrack real quick. Are any of you on Clubhouse, the app?
Yeah, I just got into it recently. I was listening to a couple of things the other day and
just heard about it.
Yeah, Bill Gates is talking right now if you want to ask him for money.
Yeah, perfect. So Clubhouse brought me my biggest investor. It was a very wild scenario. On a Thursday, I got a phone call asking if they could see how I syndicate deals. Thursday night, they bought my plane ticket and my hotel to Vegas. Saturday, I was sitting in front of 4 NFL players. Sunday, I came home with about $5.5 million of commitments of investors.
wow.
I love Clubhouse. And it's brought a lot of, ton of knowledge, but it's also put me in a ton of people that are looking to invest. They want to be actively investing into things that are making money, and they can weed out, and you can weed out the people that are not doing it for the right reasons, I guess is the best way to put it. And then it's networking, because I have to be careful. I can tell my story, I can say what I'm doing, but I can't make promises or guarantees. I have to be just me, and they have to buy into me. And if they like the deal, then they buy into me and they invest in the deal. So I just have to, I tell everyone what I do. My lady that cuts my hair is annoyed with me beyond belief. The lady that takes my Qdoba order, she knows that I invest in real estate. There's not a soul that I talk to that doesn't know what I do, for better or for worse. And I don't know, maybe some of them might be investors. I have a portal that they have to sign up. If I've never met them, there's a questionnaire that they have to fill out. This would actually be considered a meeting. So none of you would have to fill out a questionnaire, but it also helps me learn about them and what their game plan is too, because like I said, if it's not the right fit, we turn the money away. Back to real quick, because I was telling you that story. My first deal, I was getting ready to close on a Thursday. Tuesday, before the closing, we were turning money away. So I gave that $50,000 extra, and Tuesday before my closing, we were turning money away. We had $400,000 of extra money. So we rolled that into our next deal, and then we rolled that into our next one, and just continued to just snowball it all through there. So all that to say is, these investors that we spoke with, I just continued to reach out to them. If they showed any sort of interest at all, I just asked them, what didn't you like? What can we fix? What next time works on out? Wendy, do you mind if I tell our story real quick?
Yeah, I was going to ask anyway, how many hours did you have to spend on the phone with Wendy to convince her?
Not much.
Not very long.
No, and Wendy and I had a conversation, and I'm gonna be honest with you. I thought we had Wendy. I thought she was going to be in a deal, and she was like, "Oh, it's not the right time for us." I'm like, "Okay, that's fine." I reached back out, and she's like, "Yeah, I'm ready. I was waiting to kind of chat with you again." And she got into this deal that we're officially closing tomorrow morning. So, it's is that Louis behind you?
Yeah, it's Louis. He's over there.
So, we try to stay in touch. I put notes in my phone is just inundated with please call Wendy today, or call Steve. This is what's going to happen. So every day, I'm driving, I reach out to someone I haven't heard back from, and just make touches with them. And then I just bought a software that cost me way more money than I'm comfortable with, but it allows me to fundraise all my deals through the actual software. So I put all my deals into the software, all the paperwork in the software, all the deal analyzers, everything in there, shoot it out to all my investors, and it's first come, first serve. So they'll say, TJ's raising $300,000 for a deal. If you're in, here's the paperwork, sign it, commit your money, wire the money right there in one swoop of the deal, which makes it very easy now. Not easy to stomach the monthly check that I have to, or the monthly deposit that comes out of my account, but it's a great app that tracks all my investors' information, and all my growth within the deals as well.
So, I'm curious to know, can you share what that software is, or is that like?
It's a great one. It's called Appfolio, APPFOLIO. It's fantastic. I could go to my investors. They get to see every deal that they're involved in. They get to see what they're making on each deal, how it adds up to our projections. So everything is open. So Wendy, you'll be getting, if you haven't yet, an email inviting you to your portal. It's awesome. Your same email. You get to go in there and just see everything. All your documents will be in there. So if you're ever looking for the signed documents, you just pull it right up into that portal. All your K1s, all your tax documents will be right there. So it's a great software, but it's tough to stomach the $800 a month that I have to pay to have it all. But it takes care. I had 6 different spreadsheets I was using, and now I just put it all into one. So
Yeah. And so before you were doing that, like now you said, I think it handles like wiring money and everything. Were you using like an escrow account? Like, is that something your attorney set up so that people would send money to some kind of escrow type account? I would assume it's similar.
yeah, I set up something with Chase. I bank with Chase, and it's called it's like a private client account. It is a non-withdrawable account, so it's essentially an escrow account set up that the monies get wired over separate from my business. Sits there only for the purpose of a big deposit going to the title company, and so we can't touch it. I can't use it. I can't anything. It just sits there for me to then send over the title company when we're ready to close. I could do the escrow account and probably should start moving to that. But we've had no real issues with doing it this way, and it kind of keeps it simple and without a whole bunch of hoops that the investors have to jump through. But at some point, it's only going to have to be the escrow account. So.
Nice.
So I have a question.
Yeah.
You went from December 19th talking to JD to February 2020, and this all figured all this out. So I'm missing a piece there. What am I missing? I'm sure you had some background and some stuff, but you said, you got into all other things. There's something missing there, like this deal, like how you came up with your structure and your stuff.
Yeah, I was in commercial real estate with the title, right? And I saw how these guys were doing everything. I knew that that's where I wanted to go. So when I had that conversation in December, I say that conversation when we were in that breakout session and JD was talking, it just hit that commercial real estate was what I wanted to do. So I jumped in, told all my network what I was looking for, reached out to countless brokers, said this is kind of what I'm looking for.
No, and I get that, but I guess because of your background, you already knew like the syndication rules and the SEC rules and and the lawyer. I mean, where did that all come from in a month and a half that all of a sudden like, oh, I'm going to pay my investors 70%, then I'm going to give them 30%. I mean, where did all that snowball and come from? Because
my attorney. Yeah.
Okay,
so I called him up. I said, I want to buy a bunch of apartments. I don't know how to do that. And he goes, well, welcome to the syndication world. I said, I have no idea what you're talking about. He said, well, that's when you're basically, for easiest terms, is you're crowdfunding a bunch of money together with the idea of buying a set asset that's going to be able to make money for your investors, that you have an agreed upon terms with them. And you just have to perform on your promise on the deal. So, well, that sounds great. I mean, how do I do that? And he said
So TJ, no commercial academy with fortune builders, none of their trainings, none of their anything. This was just, you went and spoke to the attorney and
my mentors were, like I said, the guy that I spent my 2 weeks with, I was talking to him countless hours every day, trying to get an idea of how to do it. I knew in the idea conceptually of syndication, but had no idea how to structure it or plan it. So it was talking with guys like him. He put me in touch with other guys because there's 20 different ways to syndicate, terms and breakdowns and upside and downside. Like there's a lot that goes into it. But I was like, I have to keep this simple. What's the simplest way that I can go to my investors and say, this is how the deal is going to work? Because I'm brand new to this. And that was the structure that we came up with. That's why I said my attorney was very upset with the idea that.
No, so that's what I was just going to ask. If he's guiding you along, and then all of a sudden you took a left hook on him. I mean, how did you get that? How did you know, oh, we're going to, I hear what you're saying, but I still want to do this, and if he's training you on everything.
Yeah. So he didn't say, so his thing was, you don't have to do that. He's like, I don't think you have to give those profits on the back end. You structured it well enough to keep it out of that. My work
was that to do it on the back end.
My mentors. Yeah. So his first deal that he did it very similar to this. He had a preferred return. So that kind of that preferred interest that comes into it. But on the back end, he kept them in for the length of the deal because he was new to the game too and didn't know how he was going to do it. He bought a single family portfolio. So it was a little riskier. And so he thought he had to kind of sweeten the deal, right? So his idea came up with that. So when I roll it into my deal analyzer, I was like, well, what happens if I just keep them in the deal? What does that look like? And I was like, that's fine. I think we should be able to raise money sooner that way. And that worked very well. That was the whole game plan from the get-go. My attorney, he didn't say don't do it. He just said, I don't think you should do it. Is if you do it, you're going to be giving away a lot of money that you don't have to. I mean, ultimately on all the deals, if I looked at all of them, there's a couple $1 million at the back end that we're giving away that we don't have to. And all of our deals this year, minus the one we're closing tomorrow, have no back end anymore because we're giving so much away. They're going to get the back end interest, but they're not going to get the back end paycheck because we're giving a ton of way for doing that. It changes a little bit to the deal, but it doesn't change how we perform on the deal. It's just what the investors are going to get when the deal is sold, whether that's year 3 or 10.
And TJ, how
mentioned
much?
something just a second ago about the deal analyzer. So just real quick, I'm sorry, Marie.
Yeah.
But what's your deal annual analyzer? Where are you getting that from?
Yeah, so we took a couple different ones. My my mentor put one together. We took some from the Fortune Builders, and then we customized it to be what we wanted it to be, because the deal analyzer that Fortune Builder has is not a syndication equity split deal analyzer. The one that my buddy had one, but it was all preferred return. So there was that piece that was giving investors money right off the top. None of that fit our structure. So we had to basically pay someone to create a spreadsheet that fit all of that. That said, listen, this is our income. Here's our expenses. I'd be happy to share it with you if you want. As long as you're not going to blast out to everybody, you can use it, take a peek at it. It's does us very well. It shows the length of the deal. It shows how much money I'll make on the deal as a sponsor. It'll show when we refi what that looks like, what it looks like at purchase, what it looks like after refi, at refi, everything. So it's pretty extensive. It cost me close to $8,000 to finally get the deal analyzer exactly how we wanted. And it's still aesthetically not as pleasing as we'd like it to be, but it works and it does what we need it to.
Awesome.
Have you seen Vinny Chopra's, or I'm sorry, this is Dawn, have you seen Vinny Chopra's deal analyzer, or the one from, what is the, Bigger Pockets?
Bigger Pockets, yes. No on would you say Vinny Chopra?
Vinny Chopra, yeah, he's out of the San Francisco Bay Area.
No,
I have a copy of that. I'd be happy to share with you too.
Yeah, that'd be great. Yeah, I mean, that's and you know, it's you know, as we're looking at this deal analyzer, there's a lot of things on my first deal that are way different from our next deal, our last deal, that we would have bought differently. We still would have bought the property for sure, but we would have structured it differently. Just different ways as we continue to grow on what we could and could not do, how to pay the investors, what we can take, what we can write into deals with regards to like lawn services, like different major expenses that are coming up. I put all my cap expenditures aside. And on my first deal, I have $150,000 sitting in the bank that I still can't use because in my paperwork, it literally just states cash reserve account. So my attorney's like, I don't feel comfortable with you using it for anything because it literally doesn't say you can use it for anything. So it just sits there. He did say, you know, you can write an addendum and change it as long as all your investors are on board to show what you can apply that to or whatever. But I can't use it. So our new deals are, you know, cash reserves can be used for anything that is going to maintain cash flow to our investors and increase value to the appreciating asset in question or subject asset. So now, I mean, basically I can use it for anything as long as I don't write myself the check. I can use it to make sure the asset's taken care of. So, and the investors are taken care of. And then ultimately that cash reserves is there. You know, if I don't ever use it, it's less money that I have to come on a cash out refi because that's your money as an investor. So I just write it back to you as part of the monies that is due to you at the cash out refi. So
PJ, do the investors get to see that deal analyzer?
Absolutely. Yeah.
Yeah.
They get to see the deal analyzer. They get to see our offering memorandum. I've gone as far, I mean, and because they're a partner in the deal, they can, if they want to see, they get to see, obviously the EIN, all of our SS documents. Yeah, you're a partner in the deal. So if you want to see vendor contracts or whatever it happens to be, yeah, you get to see it all. It's all going to be in my new software that at Folio, it'll all be accessible for them. But, right now I have it all in like a Dropbox file. So I'm switching everything from Dropbox to this software, which is labor intensive, but it's what's best for me, my investors and all that. So
PJ, do you have an upfront timeline on if you're going to keep the project or sell at the end of it when it's complete?
yeah, I mean, we draw in there, what we think based on our market analysis, we're going to take to stabilize the asset. And what we plan on doing to refi that. Candidly, everything's doom and gloom. And so it's all written up as worst case scenario. So most of these commercial mortgages are 5-year balloons, right? Some of them are 7-year, but so worst case scenario, I have to refi at year 5. For whatever that looks like, right? So that is the doom and gloom side of it, that if it doesn't work out in the 24 month period that we're planning on doing, worst case, you're going to continue to make cash flow for 3, 4, 5 years. And then I refi you out of the deal, and then you continue to make cash flow after that. So that was also to answer your question. I think it was Liz. To answer your questions, the reason why we did that again is because in my mind, I was like, if I'm a new syndicator, right, I'm going to an investor that is throwing me their money and doesn't, have you done this before? No. What happens if you don't perform? Well, you continue to make cash flow. Okay. Well, what happens when I get it back? Well, you'll continue to make cash flow. And then when I sell, you're also going to get a big check. And I thought that was more enticing to investors investing in a new time syndicator than it was if I just pretended like that wasn't an option, because it is. It's 100% an option to do. It's just whether or not the asset manager myself chooses to present that to the investors. And that's why I kind of stopped doing it this year, because we are throwing a ton of money away, or not throwing it away. We're throwing it back to the investors that we don't have to do, because the deals are solid. They're getting paid. They're getting the returns. They're happy with the returns, and they're going to get their money back and then make money still on the deal. They just don't get the big paycheck at the end.
So
Well, I'm
TJ,
sure that
how would you
sounded good at the beginning. Sorry.
I'm sorry, what was that? I didn't hear it.
Liz wasn't important. So how would you compare your numbers then? Like if you're saying, most syndicators are offering like an 8% guaranteed return, what kind of percentage return are they getting with your structure with the 70% of the cash flow?
My portfolio last year was projected to make 10.27 or something like that. So we're up to like 10.3%. My entire portfolio last year made 14.3. We're into year 3's numbers overall into our projections across the board right now.
Nice.
We're pretty pumped about that. We're pretty excited about what that looks like for multiple reasons, right? Our investors are getting paid. Mm-hmm. We can refi here probably in the next, we're hoping next year, if everything goes as planned. And we've already negotiated, and 2 of our deals already negotiated our cash out refi rates after the mortgages come due in 5 years. So if we stay with them, we already have rates that are agreed upon. So.
Okay. And so who are you using for your initial purchase and then your refis? Are you using bigger banks or local banks or?
Yeah, local banks. A little bit more difficult to get the financing because a lot of these local banks are going to require you to be local and present. But where the way that we kind of get around that is that cash reserve account, right? We're throwing enough money aside to make them feel comfortable that we're putting enough equity in. We're putting 30% in. We're also then putting a year and a half of cash reserves aside that would be able to cover the mortgage. And then because the deal's local to them, if they're investing in it, it's right in their backyard. So we might not be in their backyard as an operator, but the deal is right in their backyard, and they can see the asset. They're comfortable with the market. They know the market. And we've gotten really good rates with that. We present all of our deals to our national lenders, but our national lenders are trying to target, Class A, primary, secondary, Class B markets, and they're not looking at those tertiary, low B's, high C class deals, value add. They're looking for something more stabilized because, again, we're in the midst of a pandemic right now. Not to say that they wouldn't, but it just the rates are higher, and I can get a better rates with the local banks.
Okay, and then one more question, which Roberta brought up. How are you finding, I guess, contractors in these places, since you're not local, that you trust to do the rehab? And I would piggyback that to say the property management as well, because you're not local and you're using local property management.
Yeah, so we interview a ton of property managers before we go into a new market. Sort of a job interview for them, not sort of an actual job interview for them. If they're going to manage my asset and be the boots on the ground for my investors' money, we run them through a massive questionnaire to make sure that their core values and business are aligned with what we're doing, that they're investors themselves. So if they're just property managers and they don't own their own real estate, they're right off the bat, they're gone, because there's something to be said about owning your own real estate and being able to manage other people's real estate. I think there's a big difference with all of that. So we check to see what their network looks like. We check to see what their vendors are, right? So we talk to other people that they property manage for. We talk to vendors that they put us in touch with, and we use them to help build up that contractor list. So ultimately, if at the end of the day I sign a contract with them that they're going to manage my property, I trust that the people that they're going to bring in do that. We do also check those contractors, and we require background checks, insurance, all the documents that protect us and my investors before they get to step foot into any of my buildings. But they ultimately, it comes down to my property manager that's going to trust the vendor and trust the people that are going in there.
So I got to step up with that one, because I have not had a good experience with other people's property managers. And that's where I've stepped in as a project manager. Yeah. Because I'm like, do you know what's happening on your property, kind of thing? Because I mean, that sounds great on paper and references and what have you, but to actuality, it's not always the case.
No, I agree. I don't know how to put this without sounding sort of like I find myself trying to be bad cop a lot in the very beginning, and I feel like I'm a decent judge of character. So if they pass that test, they're already on strike 2 with me. And so, you can't expect me to give you the contract, to be the property manager, to do all of this stuff, and then bring somebody in that doesn't fit and align with what I've set forth. If you're not going to execute, then I have to find someone else to do it. I am a terrible landlord. If I was managing my own properties, everyone would have free rent. Christmas would be perfectly set for them because they would be not having rent during holiday seasons. So I have to I have to step away. So there's a lot of trust that goes into that. I understand that. But I try to be as big of a hard ass as I can in the beginning to make sure that I hopefully put that right person in place. Knock on wood, we've had really good luck with our property managers. We haven't had bad luck with the contractors. There's just some that I wish the situation would have been different. And what I mean by that is I wish they would have run contracts by me first. So like bids by me first. Yeah. So we put new things in with our property manager. Anything over $250, I need to approve. Right. I didn't have that before, and there's a lot of trust that went in that. So all of a sudden, when I got a big bill for $200 or for $2,200 for garage door springs that went out and a new opener. I'm like, was any of that necessary? Like that, like, so I just took a hit because I couldn't go to my investors and say, oh, by the way, I didn't bid for this. So I just took the hit. As the GP, I just said, well, that comes out of my pocket. So like I said, every deal we've learned something new, right? That has changed our process with regards to how we deal with contractors, property managers, tenants. I mean, I was,
Me too.
yeah, I was when I was doing my own property management, the day I knew I was done was the day that I had someone call me and ask me how I got rid of ghosts. I'm like, I hope you have Dan Aykroyd's number because I have no freaking clue how to get rid of ghosts, man. I don't know what to do. So ultimately, it was
Burn some incense.
Yeah, it was a short in an outlet, and it got switched for $7 and like a $50 service charge. I was like, you got to be kidding me! I can't deal with tenants calling about ghosts. So
That's awesome.
yeah, it was a bit much. So
Awesome. Well, I thank you so much, TJ, for coming on. Does anybody have any last questions? Because I do want to go back to our accountability if we can before we wrap up. And I know that Liz will literally fall asleep at 8 o'clock, so we can't go over time.
I just want to say, Marie, we might have to go on another field trip and go like shadow TJ for a while. So
yes, I will totally go on a field trip because I want to go to Kalamazoo because it just sounds like the coolest place ever.
No, well, I said my dad had friends up there. I know people there too. So
TJ, my boys are 5 and 7, so they'll teach your boys how to get dirty.
Yeah.
good. Yeah, no, that's great. I welcome if any of you want to come to Kalamazoo. You could spend a day in the office or a week. I don't give a shit.
Well, you can also come out to Arizona because Arizona might be more appealing to you right now.
Yeah.
Than us going to Kalamazoo.
Well, I asked this, or I was going to ask this. My mom's family grew up in Arizona, so I have to ask: is anyone near Moon Valley High School?
Oh yeah, I've done rehabs over there.
Okay, so that's where my mom went to high school and grew up.
Well,
So
and you know what? She probably knows some friends of mine because they both went to Moon Valley.
I 100% have to think that that's the case. Yes.
Yeah.
Seeing the fact that anybody on this call knows that Kalamazoo's a real thing, I have to imagine my mom knows that. But
We were great by it.
oh, good. Yeah, no, it's I've never been to Arizona.
Oh, you're missing out.
So, and I have some short-term rentals, TJ. So if you need a house to stay in, just
Perfect.
I'll pick your brain. You can stay at my house.
Cloud in the sky.
It was only 77 degrees today.
Yep.
Can I say this? We're in a safe space right now, right?
Yes.
Yeah.
All of you can go to hell.
We live in it. Wait, no. In July and August, we live in hell.
Yeah.
It's a it's a
That's
permanent.
when we need to go to Kalamazoo.
I am at 36 degrees.
Yeah.
Oh, nice.
Gosh.
Yeah, it's gonna be 45 next week.
That's what a friend of mine said. My goddaughter's in Chicago and she's throwing a snowball at her roommate. And then she says, it's going to be 45 next week. And I was like, are you kidding me? That's a cold winter day in Phoenix.
It's miserable.
I was speaking of short-term rentals, I was kind of a jackwagon and didn't unbook my Airbnb for my condo in Chicago. So I'm stuck in a hotel right now. And I forget how much I love this city. So as much as Arizona sounds great, I'll probably just stick with the Four Seasons and access to this beautiful place. So
I'm just gonna say that's not a hardship. Stay down there.
no, and there was one other question Dawn had. I wanted to make sure she had this. Does CJ personally guarantee and how many deals has he completed and exited? So none of them have been exited. I've done 6. So it'll be 7 deals tomorrow. Total syndication wise, and the guarantee again you have to remember there's not much as far as a guarantee can go on a syndication, but the LLC itself does have a guarantee with the bank. It is a recourse loan, so there is that, and on my deals I do a corporate guarantee on the deals to the bank. So but there are no guarantees in the sense to the investors. I just want to make sure that that's differentiated and understood. So I can't, if you come to me, I can't guarantee you anything, but I can guarantee the investors on the deal protection that I'm not going to run from the deal, and the bank as well. So both personally and corporately, I have guarantees on those notes. So I signed on the dotted line. I'm not going anywhere. So they're recourse. We are looking at non-recourse loans for this year, and moving forward, and using agency debt like Fannie Mae and Freddie Mac, other than the local guys, which will change up a little bit of our structure. But we're going to kind of, well, I mean, the core values and core ethics for us are going to stay the same. So any investors that come into our deal will know that we're doing things the right way, and try to grow at whatever rate that allows us to grow at. So
Thank you.
Have you
What's your
considered multifamily in Phoenix, TJ? It's pretty hot down here now, market wise.
I have considered multifamily anywhere that multifamily exists. I'll run numbers. I'd be happy if you see something or are interested in how it worked. If you found something, I'll sit down and do a deal analyzer with any and all of you. If it works, I mean, hell yeah. I mean, it'd be a bummer to have to go to Arizona to go see a property. So whatever works out. I mean, if you guys find something, I would be happy to look at it. I've done that with a couple investors where I've actually bought properties with them because they found the property. We ran the deal analyzer. I closed on one, a 12 unit with a investor in 3 weeks in Wisconsin. So it's not Phoenix, but it's a new deal, and it's from my investors. Be happy to do that if you guys see something.
Yeah, so that's actually a good point, TJ. Real quick, could you just give us some of those quick numbers that you would need to even like make a decision to move forward, to talk about, you know, your 30-second over the shoulder review, what you look at on a property?
Yeah, I mean, I could tell you right now, I can tell you if I'm interested in going further in a deal with 4 pieces of information. So within 90 seconds, I can tell you if I'm interested in a deal or not. I need gross potential income minus current vacancy minus actual expenses. And I need to divide that into what the offered cap rate is. So whatever they're offering that cap rate is, that is my max allowable offer, my MOA on the deal. If that number is within 5 to 10% of what they're offering, I'll look at the deal.
Okay, say that last part again. Divide that into the cap rate offered.
The cap rate offered, that will give me the max allowable offer. That is the max dollar I will pay on that property if everything checks out across the board. And if that's within 5 to 10% of what they're actually offering the deal for, then I'll look at it. If it is not within that, I would call the broker and say, how serious are these people? Because, you know, 5-10% is loose, right? Because if it's a $500,000 deal, we're talking, 50 grand. Probably could make that happen. I don't know. But on a $5 million deal, 10% on that, I'm not going to make that happen. I say that, but our first deal was on the market for 2.7 million. We bought for 2.2 mil. So it's possible. It's not very likely. So those are the 4 metrics in the deal, and it's pretty generic and standard across the board on that. And the name of the game is to increase that NOI, that final number before the cap rate. So whether that's increasing expenses or increasing income and lowering expenses and keeping income, or increasing income and lowering expenses together, whatever that happens to be, that is the name of the game for all of that. And commercial real estate is not to be funny with it, but those numbers to me are way sexier than flipping a house. I look at those, and if you just take the difference between what $5,000 is on a cap rate it's gigantic. $5,000 could be a $50,000 increase in evaluation. So for instance, my first property I bought, my gross potential revenue for the year was $361,800. To date, 9 months after buying it, we're at $392,000 some odd dollars. That $30,000 change has increased the evaluation tremendously. To the point where if I refinance right now, I could probably give my investors their money back. The problem is that the loan requires at least a year before I refinance it, and there's a massive prepayment penalty if I refinance in year 2. So next year on that deal, I'm actually paying the same amount this year that I'm paying my investors, but anything extra, I'm just going to start paying to principal and giving the investors their money back, because that's the only real true thing I can do besides paying them astronomical amounts of money on a deal when I don't have to. So, I mean, if they're anticipating 10.5% and getting 15, that extra 4.5% is just going to go to principal. And here's your money. Now, instead of owing you $930K, I owe you $915. I owe you $900 now, and I'm going to knock that note down, because there's no point in me giving 15%. Sorry, but there's no point in giving me 15% when you're anticipating 10.5. So I'm going to give you your initial capital back so that you can do what you want with that. So I guess it's a good problem to be in for sure, but it's some of those notes, again, not knowing what I didn't know, I wouldn't have signed on that note saying I can't get out in year 2. I also didn't know that we were going to be able to increase the value that quickly, but we did. So that was the, I guess, good problems to be in. So
TJ, how can we invest with you? Do we have your contact information? Because I haven't heard it.
Yeah, I can put here, and I can put it in the group too. But
he's in Fortune Builders Mastery as well. You can search him. There you go. Now you got TJ's digits.
Yep. Make my wife jealous.
Awesome.
No, so there's if you want to email or text or call, I don't care. That's my personal cell phone. So
awesome.
You feel free to use that, send that. I'll be happy to chat with you guys. In my email, there's actually a button that says schedule a call. It's live, so if you actually want to click on it and set up like a 15-minute call to go over something, it sends you a link and me a link saying these are the times you set up. Next month, it'll actually be time slotted, so like I'll only have certain times during the day that it will work. But feel free to reach out for whatever. I mean, I mean it. If you guys have something, I'd be happy to take a peek. I'll be frank with you. I like to be brutally honest. So if it comes down to it and it's like, it's not a deal, commercial real estate should have zero emotion into it. It is business, it's numbers. Leave the emotion to residential, which is great. I'm all business with commercial. It's the easiest way to get this stuff done. So
do you have any deals out there right now that you're wanting something for?
Yeah, sure. I have a 176 unit we have under in an LOI right now. We don't have under contract fully yet. An 120 unit that we have under contract, but we might back out because the seller is being incredibly difficult. But we will have more deals. Yeah, like I said, my goal is 500. I would love to be able to get that done by August. That won't stop me from growing, continuing to buy, but yeah, I mean, there'll definitely be more deals. So
cool.
TJ, do you have a minimum number of doors for a deal?
Yes, it's really, my Zoom is freaking out. There you go. Yeah, so I try to target now anything 24 and above.
Okay.
If the numbers are sweet with like a 12 unit, I'll definitely look at a 12 unit. I won't do anything less than really an 8 unit. It just
12 unit just for the group.
Is that?
I said I'll do 12 unit just for the group.
There you go.
And where?
Yeah, so I invest in Michigan, Illinois, Indiana, Ohio, Kentucky, Tennessee, and Georgia right now.
Where have you invested so far? What states or cities?
every one of those. Oh, what city states? So I'm in
My internet
Grand
went-
Rapids,
went-
Kalamazoo. I'm in Akron, Ohio, Dayton, Ohio, Chicago, West Lafayette, Illinois, or Indiana, Indianapolis, Memphis, right outside of Atlanta, and yeah.
No
Can I
Florida
ask
yet.
Outside of Atlanta?
What was that?
Can I ask where outside of Atlanta?
Yeah, it's what's it called? Thompson. It's a small city. It was a 48 unit deal that one of the investors I work with put together. So
Nice.
Well,
All right.
wow, my mind is blown. I want to come back and like watch the recording because there's so much great information.
Yeah, and I started the recording late, so I apologize, but it was still when he was pretty much getting started. So it should be good information. I'm actually gonna stop it right now.